Hey everybody, welcome back to Green Spud Trades. In today's episode, I'm going to be doing a little bit of stock analysis on a company I found called Cognex, ticker symbol CGNX. Now, I think this is an interesting company because it could be a beneficiary of the whole AI cycle and applications that AI could be applied to. But it first caught my attention on my 52-week high list, and I looked at the chart, and it has a very interesting chart as well. So let's bring that up, and we'll take a quick look at the chart. Whoops. There we go. This is one of my first live streams, so I'm still getting used to the setup. But feel free to write me in the chat if you have any questions. But anyway, so looking at the chart for this thing, on February 12th, this thing reported earnings. They had a really good earnings release, and it gapped up. And that's a pretty strong gap up in the pre-market hours. Whoops, was that pre-market? Yeah. Or after, it looks like they reported after. So it gapped up once into the new area above the previous resistance zone, and at the open it surged up some more. And what's also interesting about this one is the volume. Look at that huge candle, and you have your gap up right there. Let's see, is this working? Yeah, that's working good. All right. So looking at this chart, you see it really hit the top of its RSI range. It was range bound for a while, and it had a little bit of like a kind of a downtrend, like a descending triangle sort of setup. And then it broke that downtrend line. It went above the previous resistance areas, pretty much stopped at where the previous top was from July of 2024. Wait, is that 2023? Actually, I think I'm going to mark that here on my chart since it seems to be a significant area of resistance. And you can see there on this volume profile. Whoop, what did happen? On the volume profile, there's that little pocket there where not so many people have traded shares, but there was a lot of trading going on down this range here. Also interesting is look at how the volume seems to have kind of trended up. I kind of wonder if that suggests that maybe there's more institutional buying going on down here in this range. Seems like it caught a bottom here in like the $20 range. Anyway, let me just check if OBS is working here. Oh, it says I have to sign in chat. A little stream glitch problem. Sorry about that. I want to be able to see if anybody's here in the live stream. Hopefully this works now. Okay. All right, so it looks like I could see the chat now. Good. Okay, so this is an interesting technical setup. Now, a lot of times when you get a gap up like that, you can get continuation, especially if it's on strong volume like a candle like this. But we didn't get that. And I would say that there's two reasons for it. One is that the $60 mark not only is a nice round number that is a psychological point of resistance, but like I say here, we had 1, 2 tops in that area. And actually, it's very interesting. If you extend this line all the way over to the left, that's a major pivot area. So it's kind of not surprising that it stopped there. But does this stock have potential to get back there and much higher? And having it pull back down into the range and fill the gap, it's kind of not all that surprising given the market that we've had lately, where the tech stocks are not really doing so well. And, the Iran war started a little bit after that. And so this is pretty much a lot of stocks right now pulling back into the range. But maybe this one could rebound. Probably needs another quarter or two, but I think it's an interesting to watch. So what does Cognex do that makes it so interesting? They make cameras that could be plugged into AI and used in manufacturing and quality assurance and logistics, pretty much anything that a robot would want to you'd want a robot to see. And it's like they make the cameras are like the eyes of the robot, but they're also integrating AI technology into it, so that the robot could interpret what it sees and do things with that. Here's some videos from their YouTube channel that are kind of interesting.
Three main
Let's watch
types
these
of
together.
machine vision systems are used in factory automation. 1D line scan cameras, 2D area scan cameras, and 3D vision systems. But how do you know which one to use and when? Line scan vision systems stitch together images line by line. This allows accurate scanning of fast-moving cylindrical or continuous objects, like rolls of receipt paper. Because line scan systems only need to view a small portion of a large object, they work well in restricted fields of view with minimal lighting effort. Area scan cameras capture images with a rectangular field of view, like most cameras you're familiar with. However, optimized lighting is necessary for capturing defects in 2D images. 3D vision systems are the most complex as they add depth to their images. They're good for analyzing objects with low color contrast, and they're crucial in facilitating robotic guidance and positioning. 1D, 2D, and 3D vision systems each have unique benefits. Deciding which type of vision system fits your needs depends on the application, available workspace, and budget.
Okay, so as you can see from that, they make these vision systems that could inspect a product in 3D and make an analysis on it, for example, determine if it's a defective product or whatever, and then do something with that. Maybe pass it off to another machine or affect some sort of work or something of that nature.
What is the problem
Let's
that
see
we're looking
here.
for?
What are some of these other
In the
videos?
past, when a computer vision expert was implementing a rule-based vision system, that person was probably spending about 80% of the time on designing the algorithm and implementing and testing the algorithm, and probably about 20% on validating and checking whether that algorithm does the right job. In today's world with AI, these percentages have flipped. With AI, what has really changed, we've basically replaced that design and implementation process by a learning process that the actual AI system is able to learn from samples that are given by a domain expert, who then can actually show the system by example what is the problem that we're looking for, what is the thing that we try to measure, what is the information we try to extract.
So I think this is a really cool application for this sort of thing. They're applying the AI models to this camera technology, and it's kind of they're applying it in a new way where it's very software driven, and it's AI software driven basically, and that's, I would say, a new thing going on. Let's see, there was one about like the data models that customers of this company they could train the models on these cameras for their proprietary products. And then I guess they own the data,
models,
right?
and then you have some test data that you're bringing in. So spend some time, some quality time, trying to determine, if that data is good enough, if you have enough of that data, if you should be collecting more. Sometimes you do not have real data, you may have to generate some of that data synthetically. The second thing is think about what exactly is it that you would tell a human, if a human inspector were doing the problem, what is it that they would be thinking about, right? And is that articulated well in the images that you're giving the model for training, right? If a human inspector is going to be incredibly confused with the criteria of what a defect is, and you cannot represent that accurately on an image, the AI model is probably going to be confused too and will have lower confidences at that bound.
So they have a lot of information about training AI models, which is, I think, going to become a big thing in the whole AI space if you're going to be kind of an expert in it. There's going to be roles for that type of expertise as we get more AI heavy in our industry. But as you can see here, they have these different types of cameras that do different things. Some of them are barcode scanners and such. Barcode scanners, vision sensors. They could detect defects, even at the microscopic level. And this is useful in, for example, making semiconductors. So like in manufacturing, it would be good for product control. Sorry, in manufacturing, it would be good for quality assurance control. So let's take a look at their financials and kind of see how much they're growing and whether this is an appealing company. So let me pull up the year-over-year stats. Back in 2021, they were growing very strongly. They had 27% year-over-year revenue growth. And I wonder how much of that was just kind of reinflation from the dip of COVID. But I guess, I guess I would time out about right. I have to go back and see in their conference calls what kind of drives that. But in 2022 and 2023, the revenue declined. And I think what happened, based on what I was able to go back through their conference calls and find, is that their business was doing really good in the automotive industry. Electric vehicles were very promising of a technology that this was going to be used in. They were very EV manufacturing focused. But the EV market sort of cooled off, and so did the revenue in that space. So their automotive business is actually not doing that great right now. But it seems to be, according to the last conference call that they had in the last quarterly earnings, their business seems to be turning around because the automobile slowdown is mattering less to them, and there's new opportunities with a new growth cycle coming up with these AI automation tools in manufacturing. 2024, they grew 9%, 8%. Well, that's a good level of growth and revenue. It's not a terrifically impressive one. So this ain't an NVIDIA scale company, but it might be an interesting one for a trade as part of this cycle if you think the application of AI is going to, if they're going to benefit. This might be an interesting trade if you think that this company will be a beneficiary of the AI cycle and its application to real world problems. Let's see, net income. So along with their little revenue dip, they had a pretty severe dip in net income, but it's still a profitable business. They're making money. They're not losing money. So that's good to see. 8% revenue growth there, 7.8% revenue growth, or net income growth. So the revenue and income growth seem to kind of move in lockstep with revenue growth. Well, I mean, they could get some leverage there. And then the share count is decreasing. They do have they do have a big buyback program, which I'll talk about in a minute. Let's see, do they have any debt? What does their balance sheet look like? How many liabilities do they have? Assets. Okay. Total assets, $2 billion. Total liabilities, $500 million. Accounts payable, let's see. Long-term leases. Really, in comparison, they don't have a very high debt ratio, I don't think. Debt. Yeah, it's not very good. They have some debt, but it's not a whole lot. Let's check that ratio. Yeah, 4P right now is at 40. Enterprise value to sales, debt to equity 0.4. Yeah, that's pretty low. It's interesting that back in 2021 they were making over $1 billion in revenue, and they haven't even caught up to their 2021 figures yet. There's under $1 billion in revenue, and this is right now a $7-8 billion market cap company. Let's see. The analyst recommendations are a buy. And it's interesting that one of the analysts who was a sell recently flipped from sell to hold. So there might be some institutional opinions on this one. They're kind of coming around. Now, is this company, how much of a moat do they have? Well, they're not the only company that does this sort of thing. There are a few other Japanese companies like Cognex that make similar products. They're kind of in the same space with the optical sensors and vision systems. There's also a company called Teledyne Dalsa that makes similar systems. So it's an interesting product that they offer, but it's I wouldn't say it's a commodity, but there is some competition in this space. All right, so let's get over to this 10K. I was looking up what's going on with their equity. They have a buyback program. 2022, they authorized $500 million of a buyback. I guess for like a $7 billion company, how much is that? 0.5 divided by 7. That could be up to like 7 to 10% of the value of the company. They've repurchased 1.7 million shares. The cost of, what would that cost be? What was the average price? The program is 79,794 divided by how much they 17. Oh, am I doing this math right? So they at an average of $46 a share, they've been buying back. Does that make sense? Let's look at the chart. So since 2022, yeah, that sounds about right. They were buying here in the 40s. That's where their buyback program was. They could have bought more down here. And that's a funny thing when you look at the results of these company buyback programs, and I guess it's probably a factor of them not really timing when they're buying it back, but I would imagine that it's done on sort of a schedule or something like that. They don't always get the best prices for their stock that they're buying back. But they just reauthorized, as of this last quarter, another $500 million in repurchases. And that's probably one of the reasons that the stock was up so much. Okay, so let's move on to... Okay, this is a little bit salesy here, but their investor day, they recently had an investor day thing. Let's see if there's anything interesting here about the markets that they serve. They serve markets and 7 billion. Yeah, of course they're a leader and everything, right? Automotive, you would think that. Vision. Okay. Yeah, so their biggest market is in the logistics area. And I wonder what they actually do inside the warehouses. That would be interesting. If it's like cameras for moving things around or whatever. Electronics. Ship millions. They work in packaging and semiconductors. It doesn't really explain exactly what they do, how they add value in these areas. That's interesting. He talks about the industries that they're in, but not really the particular products. AI barcodes. All right. Insight 9000 is another system that they have. And that one's another AI integration, One Vision. That's I think their newest product. And then they're getting all this data on the cloud. Let's see, there were some Barron's articles about them. Now, it's kind of interesting to go back in time and kind of look at what they've been saying. So let's not read this one first. There was more, they reported on their earnings. Here we go, February 12th, 2026. Shares of the machine vision provider Cognex soared after the company posted a pristine quarter. Oh yeah, let's bring up that quarterly result. Here's the quarterly release. Revenue grew 10% for that quarter year over year. Let's go down these numbers. I mean, it's solid. It's not phenomenal growth. But if you were to invest in this company, I would think you'd be expecting more growth than 10%. You would kind of expect the earnings per share up 35%. Adjusted and diluted. Okay, what is the adjustment? Adjusted EBITDA include non-GAAP. Of course, they always like to do the non-GAAP adjustments. But what was the adjustment? The expansion was driven by revenue growth and disciplined cost management. I think the adjustment might be this. I don't know. What did they adjust? Oh, it excludes one-time commercial partnership benefit. So they had a commercial partnership with another company that was revenue benefit, I guess. What was it? Oh, with a medical lab automation channel partner. Okay, I don't have the details on that right now. But it was a positive for their business, and it was a one-time thing. So if you back that out, I guess their organic growth was 35%. Let's see, the revenue. Oh yeah, here. The 12 months ended. So they give you reporting for the excluding the commercial partnership and plain as reported, which includes that benefit. So as reported, they were up 9% in revenue, 38%. Actually, okay, so it seems like the commercial partnership added to their revenue, but I guess adjusted EPS diluted, net income per diluted share. Okay, they have a lot of dilution from stock option compensation, it seems, from what I was reading in the 10K earlier. Okay. Well, nevertheless, it seems like when you don't include the partnership, their profit, they were more profitable without that partnership. So they had a higher revenue. So it indicates that the partnership was sort of a lower margin endeavor. You back that out, their revenue. Yeah, the revenue is a little bit lower. Oh no, I got that wrong. It's this column. That's excluding the commercial partnership. Yeah, so the commercial partnership seems to have added to it added to their income and their revenue by a little bit. But without it, they still grew 31% EPS. Net income per. This is a little confusing. Okay, sorry about that. Here's their presentation from the from that investor day. Going over their optic systems. Shows you the breakdown of their different types of businesses that they serve. Okay, so Barron's, they're saying that the forecast looks solid. They're guiding 245 million in sales, guiding up by how much? To 5 divided by 216, 7% or 13% higher. And so this company is a little bit of a turnaround story. And they're also, and this was said on a conference call as well, that they're trying to get rid of their lower margin businesses, and that was probably a motivation for them getting rid of the partnership, whatever that was. So I wonder how much their business overlaps with Zebra, because Zebra does the RFID tags And I'm not sure if they do barcodes as well. Gain 8.6%. Okay. Now, back as far back as 2018, 2019, Barron's was pushing this stock, talking about how much of an interesting and unique company this was. And it was down back then, too. And, of course, they were looking at it as like a value play. Its gross margins are more than 75%. Okay, 75% gross margin, convertible software company. Yeah, it's a pretty high margin company. Let's see, what would be their gross margin now based on these financials? Quarterly gross profit. Just on the most recent quarter. %65. I kind of wish they had the ratios. Yeah, I had that dip there through the early 2020s. Quarterly. Nope. They don't have it here on stockanalysis.com. Well, let's see what it was back in. Oh, I don't know what their gross margin was in 2022. Yeah, they had a higher gross margin, so it's declined a little bit over the last couple of years. That's interesting. That's probably why they want to kill off the low margin businesses if they have any. But anyway, so back when Barron's was pitching this as a value play, let's back up that chart a little bit. If we go back to, back around 2018, 2019, you're at the end of 2018, that Barron's article was here. And then when the automotive EV hype was going on, in 2020, well, every stock was up in 2020. Remember that. There was a huge bull market. So they kind of went up with the huge bull market. You could have like, I don't know, maybe doubled your money at the most. It got as high as 100 there in that blow off top after that earnings report. But let's say you caught like from the mid 40s to up here. You probably would have like doubled your money, up like 70%. But so did a lot of stocks. So I don't know. This one seemed like an interesting breakout, but maybe not so much. It's just about filled that gap, but the RSI still hasn't even gotten to the bottom, so maybe it's going to fall further. Yeah, what do you think? I'd love to hear your comments in this video. You think this one's a buy? Is it exciting? Or are there other stocks that are more interesting and you should move on from this one? Anyway, this was just a little bit of stock analysis. If you like this type of content and want me to make more, hit the subscribe button and like, and I'll see you next time.